Good morning. Welcome to Stock Market Today. It's Wednesday, June 12th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email so you can follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day, usually before the market opens. So as we dive right in to Wednesday's trading, quick recap of yesterday. Equities were a little changed. S&P 500 did break a 5-day winning streak. And what's interesting to me is that for the second day in a row, the index reversed early gains to close near the low of the day. Treasuries were mostly weaker with the curve flattening. The dollar was higher on the yen cross, weaker on the euro. Gold up 10 basis points in WTI was a slightly higher in volatile trading. At the sector level, your outperformers were staples, discretionary, comm services, and REITs. Your underperformers were industrials, utilities, healthcare, and materials. And as we get to the desk this morning, futures are down 40 basis points. Asian markets were weaker overnight with Hong Kong losing more than 1.5%. European markets are on the defensive. Treasuries are stronger with the curve steepening. Dollar is lagging the yen, but little changed on the euro cross. Gold up 70 basis points, and WTI crude is down over 2.5% this morning on a bigger than expected stockpile build for U.S. inventories. So here it is, folks. Second week close in a row. It's a little tough to see because I drew the line there, but we had a second day in a row where we tried to rally and then close near the lows of the day. Support is in the 2800 to 2850 zone. Resistance, we're at it. And that's another thing that's kind of interesting to me, is we are at resistance in the 2900 to 2950 area. And now we're watching RSI for that bullish shift. Couldn't get above 60 yesterday. Couldn't do it. Closed at 58.10. And now we have the market hinting at a lower open. If this rally starts to fail with the RSI not having broken 60, you have to say to yourself that momentum has shifted to bearish ranges, and you have to adjust your strategy. You have to start thinking more about taking money off the table in your big winners and looking to position for downside if that's what you do. We're closely watching. We're not there yet, but every day, the odds of the market are shifting. Look for the clues that help you get on the right side of it. Right now, the odds are we're going to struggle here at the 2900 level. And we want to see how the market reacts as it pulls back to test 2800 to 2850. Potentially bearish shift for an indicator, and look at Chaikin money flow back in negative territory as well. Continue to focus on leadership at the sector and industry level for clues, but just be mindful of the shifts that are potentially taking place in the market. Your market in a minute now. What am I talking about in my note to Chaikin Analytics clients today? Well, we just touched on the S&P 500 posting its second week close in a row. Markets are overbought in the near term, and we'll take a look at what that means from a Chaikin perspective. Biotech is a weak industry that's poised to underperform further. Bearish sentiment has eased but remains elevated. Futures do point to a lower open here today. Let's take a look at the power bars. Small deterioration on the S&P. No change for the Dow. 7 to 5 bulls to bears. S&P 500 with that relatively flat to slightly lower close. 119 bullish or very bullish stocks. 71 bearish or very bearish stocks. NASDAQ did outperform on the day. 24 bullish or very bullish stocks to 12 bearish or very bearish stocks. You'll notice that is a deterioration. I'm almost sick of talking about it, but it's what's taking place, so we're going to talk about it. Small caps continue to underperform large caps. For those of you who read my notes, you know where I am. For those of you who listen to this show every day or watch this show every day, you know where my positioning has been. Large over small, and that continues to be the case. Remember, a lot of people just like to look at individual stocks and pick them, and that's great. But remember that those stocks trade within the context of themes within the marketplace, and big professional investors look at these themes within the marketplace. So as you're thinking about your stock ideas, if large caps are outperforming small caps, you may want to skew your individual stock ideas towards larger names, and you need to be aware of what is outperforming and what is underperforming amongst the key relationships in the market. And that's one of the things that I do here for everybody every day. Bonds, whatever. Rallying here today, though, likely to send yields lower. According to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bullish. Major indexes are mixed. Stock of the day today is EPAM Systems. This is a software and services company, more on the services side. It's always important to know what it is, the companies that we're looking at, what they do, right? Software and services get lumped together as a group, but EPAM is a services company. It's not a pure software company. Closed at 177.45, up 19 basis points yesterday. EPAM is the ticker symbol, and it has a very bullish rating due to very strong earnings performance, very strong price volume activity, and very positive export activity. Stock does have poor financial metrics. Okay. 20 factors, 5 in each of these categories, come out when mixed together with a very bullish rating. Very bullish stock, strong trend, strong industry. Type of name we want to consider. Market and model are in agreement here as the stock has been intensely outperforming the market and continues to do so. Chaikin money flow, solidly bullish since the beginning of the year. Nice rising trend. Held support at the rising long-term trend line and now working higher. My only real concern here is that the stock is overbought. And the stock is overbought at the same time that the market is overbought it into resistance. So for me, I want to see consolidation. I want to see this kind of 170 level plus or minus hold. Work off this overbought condition. And then I think it makes sense to get involved with EPAM on the long side of the portfolio. Process every day. We'll give you ideas. Add this one to a bullish watch list. I mean, look, the other way to play this is to play a breakout through 180. For you breakout traders, here's your level right here. Play your breakout through 180. But with the market overbought, might be lower probability of the breakout sticking. Looking at our sector tracker now, movement of the major sectors over the last 5 days. Tech remains at the top of the list, and that's important because tech is 20% of the S&P 500. So to the extent that tech does well, that's a tailwind for the broader market. Discretionary, also near the top of the list, and that is a risk-on type asset class. But what else? Right behind it is staples, a defensive risk-off area of the market. Materials, remember a couple weeks ago, about 10 days ago now, we started saying pay attention to materials, pay attention to materials. Materials look like they're ready to make a move. Well, they did. And they remain near the top of the list. Real estate, healthcare, and comms are middle of the road. Financials, energy, industrials, and utilities at the bottom of the list. All of the sectors are positive over the last 5 days. I think what you're seeing, though, is you're seeing a pullback in real estate and utilities that's buyable. Right, yields got a little stretched to the downside. They started to back up a little bit. Investors started to take some money off the table in some of those defensive groups. I think you want to look for opportunities there. Remember, for those of you who read my market survival guide every week, remember that our posture has been one of a barbell. We like defensive yield plays along with secular growth. We've walked through our thesis on why that is numerous times. If you're interested, please feel free to reach out to our team, and we can provide some insight for you. Looking at our industry in focus now, mining services, which over the past 6 months has underperformed the S&P 500 by, call it 17.5%. Its power bar ratio, which measures future potential, is weak with more bearish than bullish stocks. Barely so, 3 bulls to 4 bears. It's moved up 3 slots over the past week to the 13th slot of 21 subsectors that we look at. Some of the indicative names, the ones you want to avoid: Cleveland Cliffs, Freeport McMoran, and Worthington. CLF has a very bearish rating. Freeport has a bearish rating, as does Worthington. And we're going to take a look at Freeport here today because I think it looks kind of interesting as a bearish trade. Clear downtrend below the long-term trend line, massively overbought, underperforming the market. Market and model are in agreement. I think you can look at Freeport FCX as a bearish idea. Very bearish stock, underperforming the market, becomes overbought, failing at the declining long-term trend line. I think you want to look at option opportunities in Freeport McMoran. Check that one out here today. Yesterday's S&P 500 gainers and losers. Albemarle, 3.5%. No real news there. Same with Schlumberger, SLB, up nearly 3.5%. Regions RF presented at the Morgan Stanley conference. I guess investors like what they heard there. Sent that stock higher by 3.4%. CenturyLink, no real news. Stock up 3%. HRB up on earnings and guidance. All right, a lot of moving parts to the loser side of the board, but the gist of it, the real gist of it is Bill Ackman sent a letter to the management and the board of UTX. UTX is merging with RTN. Bill Ackman, activist investor, said the deal doesn't make sense, as did Dan Loeb, another famous and well-known investor who sometimes has been known to go activist, coming out and saying the deal does not make sense. The Wall Street Journal wrote an article saying that the UTX Raytheon deal is bad for the entire defense group. So with all those moving parts, this deal, the UTX Raytheon deal, has obviously not been well received, and that weighed on the defense group yesterday. RTN down 5%, Triple L down 4.5%, Harris down 4.25%, and United down nearly 4%. The other name on the board here is Abumed, ABMD. Didn't see any real news to account for that stock down being 3%. So what did I say here? Market is overbought and at resistance. What does that mean? SPY is overbought based on our shorter term indicator. Designed to become overbought and oversold no matter what the market is doing, up, down, or sideways. Our overbought, oversold indicator has entered an overbought condition with the market kind of hitting its head on the 290, 295 resistance area. So that's what I was talking about earlier when I said, hey, the market's overbought here. And you don't want to chase a name like EPAM that's also overbought into an overbought market. As we saw earlier, money flow is bearish. So really at the end of the day, we just kind of have an overbought condition within the context of this volatile range. But in the near term, S&P 500 is overbought. Biotech, poised for more underperformance? I think so. Here's the IBB, the iShares Biotech ETF. And you can see a nice series of lower highs since topping out last September-October timeframe. Indicator, RSI, is shifting into bearish ranges. Notice how series of lower highs as well. And now it can't get back above the 50 level. On a relative basis, IBB is breaking down against the S&P 500. We are below resistance at the 106 area on an absolute basis, below a declining 200-day moving average. And to top it off, IBB has a bearish Chaikin Power Gauge ETF rating. Now, my market survival guide last week, I teed this one up as a bearish idea using a bearish put spread. So that's the type of work and type of ideas that I churn out in that note every week. So you can look for that if you're interested. Bearish sentiment has eased but remains elevated. This is the 13-period moving average of the CBOE put-call ratio. And remember last week we were talking about it, how the S&P 500 was testing the 200-day, and it had ticked over 1.1, and that generally marks short-term tradable bottoms. Well, that played out. So we are still elevated at 1.05, but kind of easing from those levels that we saw last week. So sentiment still does have a bearish tilt to it, although not as bearish as it was a week ago. And then finally, my bearish stock of the day today, my note to Chaikin Analytics clients, is Boeing. You can see here stock has broken through the 160 level to the downside. Again, RSI shifts to bearish ranges on a relative basis. It's breaking down and in a downtrend since March. So if you're looking for bearish opportunities, I think you want to think about Boeing. That's going to wrap it up for today. I mentioned my survival guide. Head over to chaikinanalytics.com/survival-guide to sign up. We'll give you your first week for free. Have a great day, everyone. I'll see you back here tomorrow.